Good evening, I'm Giuseppe Basile. I'm the Essential. You can find at the website www.fibstalker.com. I also post regularly on Twitter using the Fibstalker nickname. Good evening. Today is March 27, 2014, and in this video, I'm going to review for you the three Japanese majors: the US dollar versus Japanese yen, the euro versus Japanese yen, and the pound versus Japanese yen. Let's start from the US dollar versus Japanese yen, which is the chart that you see on the screen. Those who follow me know that I traced one in advance with more than 1 month in advance here the next measure move in this market, looking at the weekly time frame. And when I trace this on the daily time frame, comes from this level to highs. If you want to know why I trace exactly from this level, a good idea would be to review my the videos in the weekly newsletter. If you subscribe the newsletter, which is free and it only takes a few seconds, you can review the last 6 weeks newsletters, which I typically send to the new subscribers as well. So there is the justification for them. This is the next sequence. As you can see, this area of support starting at 101.50 worked quite well here, and it has been tested 4 times now, 1, 2, 3, and recently mid of March. And this market has targets above at the moment. Also, the weekly chart is aligned on the upside. However, in the market there are always two different opinions. There are longs, and in this case program trading is support longs on the daily and weekly time frame, but there are also shorts. And as you can see here, there was so far quite a fierce reaction to this 102.50 level of resistance. And actually, if you took this trade selling 102.48 with a stop above 102.79 or 102.80 here, 1 pip above this red line, actually you would have received a free risk trade here, getting half off when we had one unit of gain, which was equal to risk here, and this was around 102.14. So this market, however, is constrained between these two levels, 101.50, 102.50, so it's 100 pips. Of course, if we looked at the US dollar alone, we would need to anticipate a continuation higher here. However, the 102.50 is still acting as resistance. So until we see 102.80 being pierced on the upside, this level of support and the target attached to it will not be confirmed. And when and if that happens, then we will still need to look at this level of resistance, which is going to be the next level. As you can see here, however, the level of support was already confirmed, because in the past we had price moving above 103.67, 68. So there is a possibility for this market now that the US dollar is actually trying to confirm its sorry for that. Okay, so as I was saying, that now that the US dollar is trying to confirm its bottoms, it's possible to see this market continuing moving higher here. So we had this lateral move now since the beginning of February, so it's almost 2 months here. Moving to, but still it's good to wait and see what the market is going to offer us. As you can see, the if we look at the sequence of if we look at the trades from low to highs, this trade has marginally failed here, but still we are seeing anyway reaction at this around this level here. So there's no need to rush in this market. There will, even if we break this level, there will be an opportunity. This market will give us an opportunity to trade the next measure move high, so there's no need to rush. Moving to the euro versus the Japanese yen here. Let's see what this market is is actually also on top of a support, but the support is traded in a slightly different way. It's an extension long, and it could only be identified after the fact. So I'm not claiming that I could define this specific level before, but it's not a canonical level. There are levels that I'm able to identify with months, sometimes weeks in advance. This level was identified here after this market reacted, and then I found the anchor that program trading is using. And after we found it, then we could use to see whether the market would actually keep finding support at that level. And found support a second time, a third, a fourth time, and now a fifth time. There is the possibility for this market to keep respecting this value. Of course, anything can happen, and there is another level of support that is the proper and canonical level of support that program trading is also going to look at, and that's 140 level here. So if the euro continues to show weakness, there's a possibility now to seriously break this level and go to test the other level, 140. Okay, so this is something that we need to keep in mind. When we move to the 4-hour chart, we see that the level of resistance was 141.90 has been now tested 1, 2, 3 times, and 3 days ago I said if we get again to this level and we show weakness, that becomes a selling and a sell signal, and actually market sold here. Then this reaction higher, very similar to what happened to the euro, and then now it's actually has the potential to break these lows and get into the 139.75, which would be the first target. So let's see if this market actually follows the euro, showing that a potential weakness of euro over the Japanese yen. Moving to, but keep in mind, however, that this has to be this will need to for this to happen, the sequence of measure move short has to continue here, and there is clearly a sequence here which can be seen when we in the 15 minutes when we trace from lows to lows here. There was participation and 141.29 price that was brought into 140.93 and 140.75 the second target. Now the next resistance traded already, as we can see here, from lows to lows. This is the next extension chart. So and we could make the case that this first target was also hit. So this market would really be trading into the next lows to lows, which is the next measure move short here. And as you can see at the moment, we are trading that level. So this market will continue lower only if price will stay below this area of resistance starting 140.77 here. So if we don't see price above 140.85 here, 140.86, then there is no way we are going to go lower. This market will actually break this level and retrace all the way into previous highs here and previous resistance. So the 140.85 level is very, very important for this market. Finally, pound versus Japanese yen. Here the situation is similar. We have a support, and this time the support is a proper support because it traced from lows to highs here. And as you can see, this level also, although this 168.74 was pierced on the downside, price never broke below 166.58 here, and actually now it's reacting higher, and there is a possibility for this market to continue higher. The level of resistance that you showed before was also traced after the fact. After we saw price reacting at this level, we saw reacting the first time, and then a second time, and then a third time here. So This is, although not canonical, this is acting as a level of support, resistance, sorry. And the actual level of resistance watched by program trading on the daily and weekly is going to be 170.67. So if we move higher, the level is going to act as a resistance. And again, here in the 4-hour chart, we can see the two level that constrain and areas of resistance, support and resistance that constrain this price at the moment. And if you consider this 169.70, you could see that the sequence of measure move higher at some point failed. So at this point, we are in the process of another potential round to lows here. And we need to, it's important to start, always important to study the 15 minutes to see the actual sequence of measure move here. We had first a measure move here, hitting target, and if we were very aggressive, we could actually look at this next level of support here, which failed, but this would be very aggressive. So another way to look at that, it's using the tradition from this level, actually two highs. And as we can see, this failed after testing the resistance above this failed. And so you could even sell the breakdown below the red line, or actually wait for a retracement, which is always risky, meaning that there is the risk of losing the trade, but the entry is a better entry, 169.32. So at the moment there is the possibility on the 4-hour chart to continue lower into this area of support. Of course, depending on what we're going to see in the pound, as you can see, this is very similar to what we saw in the pound in the last 2 days. We saw this reaction higher of the pound. And as I will show you in the next video, the pound is going to test a level of resistance. There are two levels of resistance. We still don't know which one is going to succeed, but that's where the pound is going at the moment. So the same thing is happening here to the pound to Japanese yen. So this is it for the Japanese major. I hope this video is useful, and I wish you a very good evening and a great trading day tomorrow. Thank you very much for sticking around and watching this video. Bye bye now.